Welcome to the TMT Stock Market Strategy video for Thursday, February 11th. Well, we had two problems yesterday, one being oil, now at a 20, well, it was 27 handle yesterday, now trading in the pre-market at $26.58. And then, of course, Janet Yellen testifying did not help. She really painted a gloomy picture, so that wasn't good. That did not help the markets. I put out a video, the bottom is not in, and clearly you could see that in the charts. I want to show you a little bit of a longer term picture where I think the market may be headed, where the charts are telling me, and it doesn't look pretty good here, guys. I mean, and we've been talking about this for weeks now, saying that when we look for crude oil inventory builds peaking, and that's going to be sometime March, April, and I think that's when the markets will peak as well. It seems to be all about crude oil. It shouldn't be, but it's not just crude, guys. We got a lot of problems all over the world. I mean, German DAX breaking down hard, miserably. You know, you got Asia just getting decimated, and now we're following suit as well. Transportation sector, just a really ugly-looking chart, although holding up better than the last several days against the other indices that we follow. I'll show that to you as well. You know, Russell 2000, just a gloomy-looking chart. So nothing good out here at all, and I would not be looking to pick a bottom. And that's why I like to be, personally, just watching what's going on and ready to pick up the pieces while everybody's just dumping stocks. Now, I was looking for either a breakout or a breakdown in this direction, right? Because we kind of were just kind of breaking around here, up and down, chopping. We did have a bear flag that broke down. But really not risk-reward wise is not feasible to be looking for entries here. So I would be a better buyer at lower prices on big flush, or I would have been a better seller back above certain areas, and I'll show that to you in a daily chart as well. But now that looks like we are coming to fruition of breaking down, and we're down. We're down about 1.5%, down 30 handles in the ES. Now, how do you start your day trade like that, right? Down 30 handles, and that's what's been happening. A lot of the moves have been in the overnight. And I always say, guys, when in doubt, cash is a position. Step aside and let all of the markets do what it needs to do, and then jump in, pick up the pieces with some really good conviction behind you. All right, let's go run into crude oil here. We have WTI crude. That 30 area, that 27.56 was the low. Now we have 27.33 as a new low. Look what happened. We just broke down. Remember this thin zone that I'm showing you? Well, the next step's going to be right here at 21 bucks. Then we're going to see 20, and then the next step would be about $16. Okay, and that before all said and done, before all these builds are done and concluded, going into March, April, I would not surprise me if you see an 18 or 20 print handle in WTI. Then you start looking at some of these oil companies that are just really getting clobbered. Okay. Anadarko Petroleum, as you know, a couple of days ago cut their dividend. So really, it's really a gloomy picture out there for the energy names anyway. So watch this area here. I like to see that low 20s hold, 21ish area, and then I'd be really interested. And even if it broke down below 20, and you're picking up a little bit, picking up some shares of some energy companies, you average even into the low 16 or $18. I think you'll still be fine. Okay, let's go take a look at the VIX, and I mentioned that the VIX, and I also said that the VIX here really needs to break about 37.5, 40 for us to see a market bottom. So the VIX is going to be elevated today. Let's see if we get up to this area, but remember, it really needs a good 3 or 4 day flush before we get to this area, and I think it's going to take a little bit of time. So until the VIX gets highly elevated and we get some extreme fear, the markets will continue to just grind lower here. And that's what I was talking about yesterday in a couple of days. Look at the utility sector. Utilities here still holding up very, very well. As you can see, highly elevated, and it's going to break out even higher out of this range here, guys. You could see that just put a little sideways consolidation here before we break out higher, and that's what's going to probably happen today. So utilities not showing us any signs that, you know what, we're alleviating some fear in the markets, and that's not happening. It's just continually getting bid up. Utilities, REITs, consumer staples, again for the safe haven trade. Okay. Now, before we get into the spiders, I want to show you where I think the longer term picture would be in the spiders. Now, here is the weekly shot right here. Here's the 200 week moving average. If we lose the 180, we're going to see 170 and 160. That's going to be that band, and I want to show that to you, and I'm going to put this triangle here, and I want to show you that this is where this band of support, if you will, this is where we're going to see that bigger, longer term picture if this market does not start to move over. Move up to the upside, excuse me. So 160, 170, that's going to put the S&P cash at 160, so 1600 to 1700. All right, that's going to be a big area of support, and that's where I think the markets might be headed. Take a look at the monthly chart. You can see what I'm talking about. You break down for this channel, which is the 50-month moving average below this, which coincides nicely with this uptrend channel. You're going to see 160. That's going to be 1600. Okay, that's going to be the lower end of the range. 170 or 1700 will be between that upper end of the range. So not looking too good, guys. And I wanted to show this to you that I think it could absolutely get there. Okay. All right, now let's go right into the daily chart of the spiders. You can see here 182.25 is going to need to hold today. Let's see if we break down and hold again. Look at this lower lows and lower highs of the RSI and the MACD. Like I said, guys, not looking too good here. Okay, there's no positive divergence at all. And every time we start to break down, and I was showing you this bear flag that broke down nicely. You could see we broke down, and now we're holding the lower end of support here, 182.25. Needs to hold today. All right. Take a look at the IWM. Again, IWM 94.95. That's going to need to hold as well. Otherwise, we're going to get a big flush. And right now, the markets do not start to recover. We're gonna flush. We're probably going to flush really hard here, guys. All right. Take a look at the IYT daily support at 117.70. Although the transports, this is the transports ETF, held up very, very well. I would think and suggest that it's going to probably start to break down from this bear flag and start moving lower to the 117.70. All right, transport's not doing well and not stabilizing. Diamonds daily broke down from this bear flag, and this area of 159 needs to hold. Otherwise, we'll flush right to that 150.50, which is the August 24th lows here back in 2015. All right, and lastly is going to be the Qs. Resistance at 97 was support, now resistance, and look at this lower lows and lower highs. I mean, just an ugly looking chart. Support at 84.90. That's going to be the August 24th lows, and I honestly think that we probably will get there if we get some really, really fear in the markets. All right, guys, use your stops. Be very, very careful here. Looks like it's going to be a pretty wild day today in the markets. Have a great day. We'll speak to you tomorrow. Take care.